All right, guys. So in today's episode, I'm taking you guys on advanced supply and demand strategy. All right, or supply and demand trade. All right. So stay tuned with me and make sure you grab your pen to learn something and jot down something so you can be able to react this and practice this later. All right. Basically, we have all been saying, or I have been saying on this my channel that if you want to master trading or if you want to succeed in trading, you have to know how the price move and what makes the price to move. All right. So right on my screen now is very simple. This is what we have been taught, that this is how the market move. As you can see here, we have been taught that this is how the market move, while in reality it is not even close to like this. It's not even close to like this. This is not how the price move in reality. This is just how we have been taught in most trading videos and most trading books. That is why I always say that most trading videos and most trading books that you read and watch online are rigged against retail traders. All right, you need to understand these things. They are rigged against retail traders, so you have to forge your way out and gain an edge in the trading industry for you to be able to become profitable. All right, you have to gain and forge your way out. All right, and understand the market on your own way. Understand? So basically, in real life, this is what we have here. In real life, this is how the markets move, just like this. This is how the market moves in reality. All right, so now I'm going to teach you guys how you can trade this kind of market, because it's really complicated. The first part that I showed you guys was so simple. It was price just going up and down, up and up, and creating our higher high, higher low, higher high, higher low, higher high, higher low, and so on and so forth. But right here with me, it's really complicated. Now I'm going to help you on how you can understand something like this and trade the market when it's like this. All right, because this is how the market looks in reality. Okay, you don't have to fake it, you don't have to lie to yourself. This is really how the market moves. If you don't understand this, then you can't be profitable. I'm sorry, buddy, you can't be profitable. So this is it. At this point, first of all, we want to understand who is in control of the market, the algorithm of the market, who is in control of the market. As you can see, the bulls are in control of the market at this point. Yeah, if you look properly with your advanced eye, you can see that the bulls are in control of the market right now. Just like price is creating higher high, higher low, higher high, higher low, higher high, higher low, higher high. Now I'm going to explain this thing now. In this supply and demand or advanced supply and demand strategy that I'm about to explain for you guys now, I'm adding liquidity, because I don't think you can trade supply and demand without liquidity. So if anyone is teaching you supply and demand, you have to first of all, or after understanding that supply and demand, after seeing that video of supply and demand or reading that book of supply and demand, you have to also look for a liquidity concept strategy to watch or read in order to understand liquidity concept also, because you are putting these things together. Don't be deceived that you'll be able to trade supply and demand just like that without liquidity concept. You have to apply it, because if you don't apply it, you get stopped out by the market. All right, you will get stopped out by the market. Now, in a situation where we have the market like this, first of all, you want to ask, or you might know, or if you don't know, you have to know that supply and demand are basically the points where smart money tend to enter for a huge buying or selling pressure. All right, I've always say these things. Okay, I've been saying these things, and you're supposed to understand these things by now. Supply and demand are basically the points where the smart money tend to enter for huge buying and selling pressure. Now, in a buying market like this, in an uptrend like this, where the bulls are in control of the market, you should know that demand is in control of this market now, because price is trading upward. The bulls are in control of the market, which means that demand is in control of the market, because demand is the one pushing the price from this point, and from this point. Understand? So firstly, you want to spot out our demand zone, because this video is basically on demand zone. on demand concept or strategy. You are spotting out your demand zones. As I have here, as you can see, it's up to like, I think it's up to 3. Yeah, here is 3 demand zone here. Now, after spotting out your demand zone, or depending the trend that you are trading, if you are trading a downtrend, you should be spotting out your supply zone also like this. So this is an uptrend, so you are spotting your demand zone because demand is in control of the market. All right, so this is what you do. After spotting your demand zone like this, you are waiting for price to respect that demand zone. In other words, you are waiting for a break of structure right here to the upside in order for you to trade it, or you are waiting for a break of structure right here, a change of structure. I always miss these words. You are waiting for a change of structure right here in order for you to trade and continue this uptrend. And secondly, you are waiting for a change of structure or a change of character at this point, depending on how you want to put it, change of structure, change of character, whatever. You are waiting for it also at this point in order for you to trade in the continuation of this uptrend. And also you are waiting for a change of character or change of structure at this extreme demand zone here in order for you to trade the continuation of this up move. All right, so don't be confused by this. This thing you see here is a change in the market structure. And one thing you shouldn't look out for is a change in the market structure when market is at the middle of nowhere. All right, when you see something like this, basically it's at the middle of nowhere. Price is not at a supply zone yet, because when you see a demand zone or bulls trading upwards, when you see the market going upward, it's either retexting to a supply zone. It's retexting to a supply zone. If you go to the higher time frame, you will see that this is just a pullback to a particular supply zone. All right, or the higher time frame is still bullish. Either these two, it is one that is in control. Either the higher time frame is still bullish, or this is just a pullback to a certain supply zone. So when price is not at a key level or a supply zone yet at this point, you shouldn't be looking out for a change of structure. So this change of structure here should not concern you. So don't trade a change of character at the middle of nowhere. You only trade a change of character when price is at a key level. I don't know if you're understanding me. So basically that's it. Now you're waiting for price to respect any of this demand zone. You're waiting for price to respect any of these demand zone. Price might come to this first demand zone and not respect it. That's why I say you have to check out for change of character before you trade. Price can disregard this one, and come to this extreme demand zone. Price can even respect this first one. So you never ever want to know or predict what the market is about to do. You only react to the market. I don't know if you're understanding me. You only react to the market. You don't predict what the market is doing, because at the end of the day, the market will still do its thing. All right, so you don't predict the market, you react to the market. So whatever the market gives us, if it aligns with our strategy, with the way we trade, then we take that trade. All right, regardless of any FOMO or fear or greed or anything, we just take the trade. All right, so basically this is how we do it. Now let me go to the charts. Let me show you something brief on the diagram I first showed you. Now this is what the market is doing, this is what the price is doing at this particular time. Now you are not trading with what price has done back in 2020 or 2021 or 2022. Now you are looking at recent price movement, because I am in the higher time frame now. You are looking at recent price movement. All right, as you can see here, price is in an uptrend. All right, the bulls are in control of this particular market at this point. Now, first of all, like I said on that diagram that I showed you guys, you are spotting out your demand zone when the bulls are in control of the market, and when the bears are in control of the market, you are spotting out your supply zone. All right, so this is what you do. Is either you are trading to take profit at a demand zone when price is bearish. It's either you are trading to take profit at a demand zone, or when price is bullish, you are trading to take profit at a supply zone. I don't know if you're understanding me. You're trading to take profit at a supply zone. Now the price is bullish. Now you are trading to take profit at a demand zone. Now while you are trading to take profit at the demand zone, you can also trade in the continuation of that bullish trend. Now, let me remind you now, when you are trading to take profit at a demand zone, when the price is bullish, you are trading against the trend. Okay, you are trading against the trend. At this point, you are supposed to be skeptical about markets. You are supposed to like enter for the trade and get out of the trade immediately, because you never ever know where the price will react from, or retrace from, or reverse from. All right, so while trading the counter trend, you should be very very skeptical, very very serious, and take profit very fast. All right, so when we have a bullish market like this, or bullish trend like this, you're spotting out your demand zones. Okay, right here I'm going to spot out these ones, this extreme demand zone, the first, and secondly this demand zone right here, and also lastly this demand zone at this point. Or not lastly, we also have another demand zone right here at this point. Now what did you see here? I'm not supposed to spot out this demand zone, because price has disregarded it. All right, it's no more useful, so I'm taking it out from the way. Taking it out, price has already disregarded this demand zone here. Now price is at this demand zone. It's either we are waiting for a break of structure to trade in the continuation of this bullish trend, like I've been saying. It's either you are waiting for a continuation to trade the continuation of this, you are waiting for a change of character to trade the continuation of this bullish market or this bullish trend, or you are not trading, because I don't see what you'll be doing if you are not waiting for a change of character at this point, because this is a key level. All right, this demand zone is a key level. So at any demand zone, you might see the change of character at this first demand zone, you might see it at this second one, or this one, or this extreme demand zone. All right, price will still do its thing. Right, price will react from any demand zone the price want to react from. All right, so all you do is just to react and trade with the smart money and trade with the market. That's just it. All right, that's just it, as simple as that. Now let me go to the lower time frame. Let me show you what price is doing at this particular point. At this point, let's go to lower time frame. All right, now if you can recall, this is the supply zone we have drawn. The demand zone. All right, this is the demand zone that we have drawn on the higher time frame, right here, and the extreme demand zone, which is right here. So now we are looking at the current price movement at this point. What price is doing at this point is either we are trading in the continuation of this bullish trend, as I have told you, on the higher time frame, or we are not trading at all. That means price is disregarding this demand zone. All right, so we are waiting for a change of character at this particular point to know if price is going to continue going up, or price is going to keep going down, to respect the other demand zone, because there are other demand zones for price to respect. So we are reacting to what price is doing, remember. So this is what we are doing now. As you can see here, let me show you something real quick so you can understand this. It's very simple, by the way. I know not simple for beginners, but if you have been in the market for a period of time, you should understand all these things. Now, like I said, in a downtrend like this, you are taking a trade to take profit at a supply zone. When price is reversing, that's you are trading against the trend. But if you are trading with the trend, you are trading like you are entering for the trade to take profits at the low, because when price is like going down, price is giving us a higher low, a lower low, lower high, lower low, lower high. Sorry about that. A lower low, lower high, a lower low, lower high, lower low, lower high. So when you are entering at a supply zone, you are waiting for price to reverse to a supply zone, like right here. You are entering for the trade at a supply zone. You have to take profits at the next lower low, which is right here. All right, this video is not to show you where to take profits and all that. I'm just showing this, or showing you this in addition. All right, so you can understand this. So now this is the pullback to the demand zone. We are waiting for a change of character in order to continue this bullish uptrend. All right, so at this point, in order for us to understand and see clearly the change of character, we have to spot out the point where price broke structure. All right, price broke structure. Sorry about that. Oh my God, price broke structure from this point. All right, price reacted at this point firstly and went up, but it failed to break this supply zone here. So it broke structure to the downside. Now price is still bearish. All right, we have not gotten a change of character yet, like I said. So price is still bearish. Now I'm waiting for that change of character. As you can see here, price respected this zone, went up and broke past this low here, this lower low here, and went up again at this point. Now this is a high, this is a higher low. I'm spotting it out. Now remember, let me tell you something. As you all might know me, I won't explain or analyze a chart that I haven't took. All right, I've taken this trade. Okay, this trade has already played out. Okay, that is why I'm just explaining how the thought process, how I took the trade, how I entered for the trade. So in order for you to like understand me, you need to know that I already took this trade. Okay, I'm not just here yapping to you what I haven't done or telling you things that I'm not doing. Okay, I took this trade. I just cleared the chart so I can explain for you so you can understand. All right, so stay with me. This is our last lower high, because this high is lower than this high, so this is our last lower high. We are waiting for a change of character, remember, like I said. And firstly, this big line here, this line that I drew here, is our demand zone that I drew on the higher time frame. Now price has soaked liquidity firstly below our demand zone at this point, and now price broke or price changed character at this point. This is where the change of character happened at this point to the upside, as you can see, with a lot of liquidity. All right, price changed character with a lot of liquidity right here. I don't know if you are seeing this, with a lot of liquidity. Now I'm waiting for a pullback. Don't forget that I'm waiting for a pullback, and while waiting for a pullback, I'm spotting out my demand zone, because there is a demand zone that led to this break of structure right here, or this change of structure right here. A demand zone that led to it, which is like this one, this particular candlestick here, this particular candlestick here. Now for you to understand this, look at this very well. Immediately after this candlestick, this bearish candlestick is done forming, then we have the bullish engulfing candlestick. As you can see here, this is a clear bullish engulfing candlestick. All right here is a clear bullish engulfing candlestick at demand zone, because this was the place that supply entered for the market, but the candlestick before that engulfing candlestick is the order block. I've made a video concerning order block. You can go and check it out. All right, so we are waiting for price to respect that order block or that demand zone before price broke structure. All right, so as you can see here, price respected it at this point. Now I entered for this trade twice. Entered for this trade 2 times. At this point, immediately price respected it and gave me these 2 engulfing candlestick, these 2 bullish engulfing candlestick. Entered for this trade right here, and entered for this trade right here. My stop loss was right here. Okay, I'm going to be so honest with you guys. My stop loss was right here, and my take profit was right here at this point. Now something happened here. If you can see something, there is a flip zone which is right here. This is a flip zone. Price sweep liquidity below this flip zone. Now to me, price has swept liquidity, because this is how I trade. Price has swept liquidity at this point, so I entered for the trade. Immediately price sweep liquidity and gets to my order block, which is my demand zone. All right, and price is now reacting from this demand zone to continue this bullish uptrend. All right, so now I took my trade immediately. Price respected this order block and I entered for the trade, but I got stopped out at this point. Now this is what you should learn from this video, or this is what I learned, and I want you guys to also learn this also. When price stops you out, look for what you did wrong. Okay, look for what went wrong in that particular trade and see if you can continue trading. All right, if you see that this whole analysis is wrong, then you are wrong. All right, you are wrong. Then just wait till the next day before you enter for another trade. Don't trade with emotion or trying to get back the money you lost. All right, but at this particular trade now, I see what I did wrong. Now price was just doing this thing. Okay, I won't really say that I did something wrong. I didn't do anything wrong. The analysis and everything was right. The only thing I saw that is that price went to sweep liquidity below this point here. Below this point here, price swept liquidity below this point here. All right, as you can see, it's a live trade. I'm not replaying any bullshit. I'm just telling you what I did. Okay, so price swept liquidity below this point and I saw an engulfing candlestick also, so I entered for the trade without feeling any fear, without any fear or anything. I didn't fear anything, or I didn't become so reluctant that price might stop me out again. I didn't do that. I entered for the trade immediately because I know the analysis I did. Okay, I know the kind of analysis I did. I know that I was wrong. I was right in this analysis. I was right in this analysis, and price is supposed to go my way. So I just entered for the trade again and took profit at this point, as this supply zone right here. So this is like, I think 1:2 or 1:2.5 thereabouts that I did here. So this was how it played out. So the money now that I lost at this point where price stopped me out right here, I've made even ×3 of it by this one particular trade. So this is just it. This is just how you become profitable. You won't stop losing. You will always lose, but be winning more than you lose. All right, and this is where risk management comes in. All right, this is where risk management comes in. All right, so let me show you another example on a trade. Now this is another trade that I took at this point. This is another trade that I took. It's very simple. Now also, like I said on the other trade, price is still bullish at this point. Price is still bullish and price is respecting a demand zone. First of all, you are spotting your demand zone. Let me make this real quick. You are spotting your demand zones. Demand zones, your demand zone. And right here. Now, price is at this demand zone, this first demand zone, and price has swept liquidity below this first demand zone. Now, I'm waiting if price would respect this demand zone or not. It's either price is respecting it or price is disregarding it. All right, so we are going down to the lower time frame. Let's see what the price is about to do. I think I'm going to take off this because I think it's going to be confusing at the lower time frame. Let me take it off. Now we know on our head, or we have it in our mind, that prices at this demand zone. So we are waiting for a break of a change of structure at this point to the upside in order to continue this bullish trend. All right, so let's go down to the lower time frame. Now this is what price is doing at the lower time frame. At this point, this is what price is doing. Like I said, I removed that demand zone that I drew in order for us to understand better and see the clean market. All right, so we can analyze something perfectly. All right, so this is what the price is doing at this point. Remember, price is in a downtrend to facilitate the pullback to the demand zone in order for the uptrend to continue. All right, so at this point, recently, price broke structure to the downside at this point. I'm taking you guys somewhere. Here, let's take it gradually because this is the analysis I do while trading or before I take my trade. Now, this is what price is doing. Price came to this point, failed to break past it to the downside, and gave us and went up to this point. All right, now I won't consider this as a supply zone. Let me zoom in. I won't consider this as a supply zone because price didn't break past this last lower low at this point. All right, I won't consider this, but rather I will consider this as a supply zone because this was the point that price broke past this last lower low at this point. All right, so this is a supply zone. Follow me. Let's go step by step. Let me make this a little smaller. So this is a supply zone. Now, in order for us to see a change of character, price is supposed to break past the supply zone to the upside and come back to retest some sort of demand zone before going up. All right, so we are going to the extreme lower time frame. We are going to like the 15-minute time frame or the 5-minute time frame to check out what price is doing at this point. All right, let's see. Down to the lower time frame, to the 15-minute time frame. Sorry about that. This is what price is doing at this point at the lower time frame. This is what price is doing. Now, like I said, this is our supply zone. All right, after price broke past this lower low at this point, price retraced, and this is our supply zone that is causing this other break of structure to the downside. There's a break of structure here because after price broke past that first lower low, give us this lower low also, this lower low also. After price broke past this first lower low at this point, it gave us this lower low also and went up to this point. Now this is a supply zone that is causing this break of structure. First of all, this is a supply zone here. There's a supply zone here that is causing this break of structure at this point that broke past this last lower low at this point. Now, price broke past this second lower low at this point again. So this is what caused this break of structure. Now, this is a supply zone. I don't know if you're understanding me. This is a supply zone. So, what are we looking for? A break of structure or a change of character? Sorry about that. We are looking for a change of character to the upside in order for us to know that the bulls have come into the markets, in order for us to continue the uptrend. Okay, so this is what I saw when I zoomed in. I thought this was a change of character because immediately I saw a candlestick closing above it. It's a change of character to me. Okay, so I didn't see a candlestick closing above that point. It's just the candle shadow. It's just the wick closing or popping above it. I didn't see that, so I'm not trading with that. All right. So I only saw this, the candlestick closing above this supply zone at this point. I don't know if you're understanding me. Candlestick closing above the supply zone right here. So I saw that and I knew that the bulls or the bears, sorry about that. No. What am I even saying? The bulls have entered into the markets, right? So the bulls have entered into the market. Now we are looking for a buy opportunity. Now price closed above that supply zone. I'm waiting for a pullback. Now where is price is going to pull back to? Understandable. Now, okay, this is it. A lower low, a lower high, because in order for you to understand or know that price has give you a lower high, at least up to 3 candlesticks closing above each other, all right, should be at the pullback for it to be considered as a valid pullback. All right, so this is it. A lower low, lower high, lower low, lower high, coming down to this point. Now, did you see what happened here? We're not going to spot all our lower high or our lower. I'm only going to spot the last lower high, which is right here. This is the last lower high at this point. Now, what did price did? Price broke above this lower high, giving us a change of character. Right? Is that not a good thing? That is what we are looking for. Right? So this is a change of character at this point. Now I'm waiting for a pullback after seeing the candlestick that led to this change of character, which is this particular candlestick. Because if you go down to the lower time frame, like the 1 minute time frame, you will see that there is a consolidation at this point. This little thing here is a consolidation at the lower time frame. At the 1 minute time frame, if you go down to the 1 minute time frame, you will see that. So we are going to just refine this little consolidation here to this candlestick, this last candlestick before the bulls entered into the market. This last bearish candlestick before the bullish candlestick engulfs it. We are refining it to this one, which is our order block. All right, so this was it. Price respected it and gave us an engulfing bullish candlestick at this point. Immediately I saw this engulfing candlestick, I entered for the trade. This is just it, as simple as this. I entered for the trade and my stop loss was below this demand zone or that order block at that point, and my take profit was just right here at this supply zone. At this supply zone right there. Now, without yapping or faking anything, this is it. This is just how I trade. And this would, all right. So I just want to ask you guys questions. I just have a question for you guys, and the question is just very simple. What is your why? All right. What is your why? Why did you start trading? Why did you see trading as an occupation? Why at first did you start trading? Now, this question is very, very deep. I know it might take you a long time to answer it, or some period of few hours or few seconds or few minutes, depending on yourself, because you know yourself more than anyone else's do. All right, so what is your why? Why did you start trading? Are you trading just because you just saw some trend line on your Instagram while scrolling in Instagram or TikTok? You just saw trading analysis and you just start trading? What's the reason? Why did you start trading? What's your mission? What's your goal? Now, this is the first question you're supposed to ask yourself before you start studying trade or buying some courses or learning how to trade, because this is the root of it all. This is the root. This is the foundation. Why are you trading? What's the reason? Now, I want you to challenge yourself. Take out a pen and a book. Write down the reasons why you start trading. Write down the things you want, like the reason why you start trading, the things you want to gain from trading, which are your why you started at the first place. Jot them down. They are very, very important, because they are going to help you when the hard times comes. Because I'm not going to sit down here and lie to you that the hard times won't come. Okay, you will face challenges. The market is going to treat you so bad until you gain clarity in the market. All right, the market is a brutal teacher and is ready to teach you as much as you are ready to learn. The question is, are you learning from those things the market is teaching you? Are you learning from it, or you are just being bothered of the losses? All right, so this is very important. Know your why and jot down your why. You can just place it at the wall in your room, because that is what I did. I placed mine in the wall of my room, so when I wake up every morning, I see it, and it's like it reminds me of something to keep moving. Okay, to keep moving, because basically at this point of my life, I've been having a lot of advices coming from different parts of the family, friends, and all that. All these things will come to you also, but what will keep you going is your why. So that's why I said you should know your why, and your why should be strong enough for it to like sustain you when this time comes, because time will come that you will be the one encouraging yourself. There is nobody. When you started, there might be people encouraging you when you start, but when you start losing your savings, when you start putting your savings into your trading account and you start losing them, then people will start discouraging you, telling you that, is this really what you want to choose for yourself? Are you sure you want to keep trading for you to be losing all your money? When will you be? All right, but what will make you overcome them is if you really know what you are doing. is if you know the reason why you started at the first place, you can overcome all these questions, and it will like stop you from overthinking, because you will even get depressed from losing. I'm telling you, this is the hard truth or the bitter truth. You will even get depressed from losing money and getting all this advice from people. So please, it's very, very important you know your why and the reason why you are trading. If you don't know your why, then you are just, I can say you are just gambling. You are not trading, you are gambling, because it's going to take you a long time to get to your destination. So while you are on your way to your destination, a lot of discouragement will come. But how can you overcome them if you don't even have your why you started, you don't have the reason why you started trading? How can you overcome them? All right, so this is like the foundation of it. Like I said, it's the foundation of you becoming a profitable trader. If you really want to be a profitable trader, you should know the reason why you started. It might be you want to have financial freedom, you want to have time freedom, you want to have location freedom, you want to retire your parents, you want to retire your siblings, you want to quit your 9 to 5 job. You want just pick one particular one that is very important to you, that you just stick to, and make sure you achieve that. It might be you making 10,000 per month, 20k per month, 5k per month, whatever. Just have it at the back of your mind, and your why should be strong enough to be able to keep you. Your why should be strong enough to be able to keep you while all these challenges will come. Okay, so it is very, very important. And just be yourself. Okay, the secret of you becoming rich or profitable. If I use the word profitable, it might be like I'm talking about just trading. In every aspect of your life, the key of you becoming successful is to tell yourself the truth always. Stop lying to yourself. Okay, stop lying to yourself. You are doing something wrong and you are trying to paint it to make it look like you are not really wrong, like you are not really the fault. You are just blaming the market for it. Take responsibilities, buddy. Just take full responsibilities. Whatever mistake you are making in life or in trading or whatever, take full responsibilities of it, because you are the reason why you made that mistake. Okay, you have something written down, some rules written down. Ask yourself, are you following those rules? If you are not following those rules, then you are not being yourself. You are lying to yourself. How can you write down some trading rules and you are trading with your emotion and trading with greed without even following those plans you wrote down? So think about it. Stop lying to yourself. Tell yourself the cold hard truth, the bitter truth to all these things. Tell yourself the truth. Alright, and follow your plan. Anything you jot down, anything you wrote down concerning your trading, follow them step by step. Alright, so that's just it. It's very simple. So I want you to also understand that while you are jotting down your trading plan, your trading rules, and whatever, you also need to jot down your life rules because it's very important, because the life you live somehow affects your trading account. This sounds so unreal or unusual, but that's the truth. The life you live as a human being somehow affects your trading account. You might not know, but it's affecting it. Okay, now if you are busy sitting at home, eating junk food, sleeping too much, sleeping late at night, waking up late, all these things will affect your trading account. Because in my country, London session starts at 7 a.m. and 5, 6 you are still sleeping. You have to like knock yourself, or you have to even flog yourself, because you are making a big mistake. Don't think that you just have to write down only trading rules. Your life rules is also important. I can even say the way your trading rules are important is also the way your life rules are also important. Start doing the right things. Okay, start doing the right things. Look at your trading mentor, whosoever you are watching on YouTube or whosoever you are seeing on Instagram. If the person is a real trader, I'm not talking about an Instagram trader. I'm talking about a real trader that has passed through challenges in the market before he or she becomes profitable. If you are watching them, look at the things they do on a daily basis. Look at the things they do on a daily basis. Now, those things you see on Instagram or TikTok or whatever, those things are bullshit. Okay, those are not how trading life look like. Okay, profitable trading life is really boring, because it's you repeating the whole same thing. You are repeating the same thing. Waking up in the morning, exercising, meditating, facing your chart, trade. In the afternoon you hit the gym, in the evening you study trading, and just continuously, just like this. So most of the times the only thing you can do is just like go to vacation, and while you are going to all these vacations, traveling from country to country, or seeing the beach, or going to club or whatever, you are still looking at your chart. As a trader, you are still looking at your chart, and the clubbing thing is not going to be like every time. It's going to be once in a while, because you have to be very disciplined. So the life of a profitable trader that you see online is not really it. The life of a profitable trader is really boring. Okay, it's really boring. Just like me now, well, all I do is just simple. I just keep repeating things that I've been doing for years now. I just keep repeating it. Wake up in the morning, exercise, meditate, take some cool shower, then analyze my charts and wait for London session. Then trade in the afternoon, hit the gym. In the evening, study trading and go to bed early. I wake up, I repeat the same thing. Now, this is a quote from a Chinese master. This is a quote from a Chinese master that he's not afraid of a person who has learned 1,000 skill. He's not afraid of someone who learned or who masters 1,000 skill. He's only afraid of a person who masters one skill 1,000 times. This is very powerful. Alright, it's very powerful. Those things you keep doing repeatedly, if they are the right thing, they are going to pay you off. I promise you, they are going to pay off, and you will enjoy it. Now, it's not fun. It's really boring to do these things. Very boring, and it's hard to do. After going to the gym, it's hard to wake up in the morning, and it's hard to wake up early in the morning and exercise again, and meditate and take shower and come to the chart, come to your table and watch the chart or analyze your chart. These things are hard to do. Don't think they are easy. They are very hard to do, but you have to keep doing the hard things. All right, you have to keep doing the hard things. Now, I'm only talking about the life of a profitable trader, the things that they do repeatedly. Now, you as a beginner, what are you doing? Are you still eating junk food, not going to the gym, still sitting at home watching P or watching Netflix or whatever, or chilling? What are you doing with your life, buddy? You have to be serious. You have to be really serious. Take down pen, write down as much things, as much life lesson you need to write down, and pick out the important ones and keep doing these things repeatedly. Slowly you're going to see yourself change as a person. You will change as a person. Meditate is very important to improve your focus, so you don't get distracted while looking at the charts, because a lot of you guys are looking at the chart and also thinking about what to eat in lunch, thinking about the beautiful lady you saw on Instagram while scrolling, all those bullshit. You have to rewind your brain. Okay, meditate help you, or meditating helps you to improve your focus, improve your thinking. All right, so these things are very important. So please be careful with the things you do. jot down the right things and do the right things. Always the right things. All right. And don't forget, happy trading day, happy trading day, and happy trading week. All right.